Okay, hello everybody, and welcome to Investing with IBD, sponsored by MarketSmith. Today is March 18th, 2020. I'm your host, Arusha Paris, and with me today is a man who needs no introduction, especially anymore, Mike Webster. He is the head of market
Hey,
strategy at Investors Business Daily. Thanks for being
I'm
here, Mike.
back. I'm back. And now I
Mike
can't see your
is,
face because we're doing this remotely, man. So
yeah,
I'm gonna
yeah.
imagine you smiling at me the entire time. Oh,
but
dude, you
but but
didn't put that
but I
picture up.
could see your face, Mike, and so this is how Mike was looking yesterday, with his
Oh,
with celebrating St. Patrick's
dude,
Day, the first St.
dude,
Patrick's Day probably ever in isolation, right?
yeah,
And all the bars were closed, and so Mike was all alone, but he had his hat
yeah.
and
Me
he
and
knew
my
what things
hat, we were
starts.
hanging together. And what you can't see is that was a Grateful Dead Boston
Oh, nice.
t-shirt
Oh,
that I
that's
was
very cool.
rocking. Yeah. But I've since trimmed my beard because after that posted, I realized that even though I'm at home, I should, take care of things.
On today's podcast, we are going to talk about the current market. We will go over a history lesson, and Mike's going to walk us through a number of examples of fall through days and things that we can expect. Obviously, what we're seeing now is unprecedented in many ways, but we still can use history to get an idea of how markets can recover. And then we will actually end the episode with three current stocks that are
Well,
showing
four,
relative
kind of
strength,
four.
or maybe four, or maybe four. So yeah, we'll just have to see how it goes. Okay, so let's get into the current market, Mike. And the market is in correction. And here's a snapshot I put up of the daily Nasdaq. And at first, as you can see here, how far are we off the highs now? Maybe
I think
30%
we're
or so, or is it?
28 at the
Okay.
close, but we bounced way off the lows by the time we close. And this is, a perfect example of just fear all over the place because typically when you break, you stop and pause for a little bit and then rally up and then you break some more. And we have some examples of that in the second segment when we look back at history. But this is kind of like a constant crash from the very top. I mean, with very small pauses in there. So there's panic. It's reasonable panic because no one knows how this is going to play out. No one knows, how many people are going to get sick and pass. And then when it translates into, earnings and then the GDP of really throughout the globe, it's really going to have a huge impact. So what you're seeing is the market is just being revalued at these lower lows, lower prices because people don't know how to price in what the earnings hit is going to be. But as we said last time, once the market can get a handle on it, will stabilize. It doesn't mean we were going to rip back up to the old highs. That's just
Right.
not in the cards, but it will stabilize. We'll get a follow through. It may or may not work. Then we'll get another one. And, by the time you have a couple in there, then and you'll see with the examples that we've brought today that, then that's when things get going. But this is a scary time. What are your thoughts on it?
No, it is very, very scary. It's just incredible what you're not only seeing in the markets, but when you see outside. It's Mike and I were talking before we start recording. Well, Mike and I usually would walk to Whole Foods for lunch every day. That's
Yeah.
out the window now. It's there's a line outside of the Whole Foods near work where they're only letting so many people in at a time, and people are just going there to get supplies and necessities and things like that. And so lunch is really not an option anymore anywhere, it seems. And also the other big thing is now. Uh, Most of us are, at least for part of the week, we're working from home to do the social distancing too. So it is pretty wild what's going on. There's a lot of fear, and you're seeing that in the markets. Let's take a look at the weekly chart, and it's just rare to see a drop like this, right, Mike?
Yeah, when you step back and you look at longer periods of time, it's very helpful because you can see where the prior support areas are. And this is not the way a market correction happens. This is so unusual, and as you said, it's really unprecedented. Of falling this quickly. But it's for good reason, as we mentioned. And think about it, the all these stores, they're when they were letting people in, they're doing it, just a few at a time, and so people can only buy so much, and then they're hoarding. So that's going to impact buying, in the future, because before you know it, you're going to have enough toilet paper for the next 5 years at your house. So you're going to have a huge, amount right now as soon as you can get your hands on it. But then, it's going to be very lumpy for earnings for a lot of companies that are that everyone's hoarding. But then on the flip side, you do have things where they're going to benefit from it because, anything that benefits from you working at home or cocooning, staying at home, whether it's a Netflix or a Zoom or anything that delivers to you, you're going to have a benefit there. But even thinking about computers and laptops, so many people now, because they're at home, they're having to upgrade their PC, their laptop, their iMacs, what have you, because now your office is at home and you need to have the same thing that you had at work. So it's going to be fascinating to see, which companies actually benefit from this, and which ones, get hurt. Obviously, you've got the travel industry is just killed between, the airlines and the hotels and the cruise ships.
Yeah,
Those
yeah.
are just
With the
destroyed.
airlines, I think I saw like United Airlines. I think it was like 75% off its high in like a
Yeah,
month. It's
it's
unbelievable. Oh,
77%,
is it 77? Okay, yeah.
Yeah, and
It's just
Carnival Cruise is 83% off its highs.
yeah, yeah. So there is obviously a lot of fear in the markets, and sometimes that fear knows no bottom, right? So and it just keeps happening until there's some kind of confidence that comes out or some good news that's going to come out with the coronavirus, that they can slow it down or at least it starts to flatten out. Let's take a look at the monthly also
Yeah.
here to give a little bit more perspective. This chart here goes back to 1998, so it's capturing the dot-com boom all the way through. So this is the third kind of major crisis that we have here on the chart.
Yeah, and you can see this is, when you put it in the context of a monthly chart now, the month is only, a little bit more than halfway over. So where we close for the month is going to be very critical. If we were somehow able to get back about, back up to like an 8,000 level, this is going to look like a huge shakeout. Now,
Right.
if we go down to 6,000, it's going to be like lookout below situation. So this is, it is very tricky, and that's why we have our rules and we wait for a follow through day and we don't try to just buy in the midst of this mess because this could be really, if you look back to 2000, which is on the left side of your chart, this could be early on in that move, or it could just be, more like 1987 where it was, very short lived. So we have our rules. We just, right now you're just sitting with very little stock, or most people are probably just in cash, and just waiting out the storm.
And that's the I think that's the big thing. You're waiting out the storm, but you also so you're on the sidelines, you're being defensive, but you're still looking forward, looking for signs that this is going to end, looking for ideas of stocks that are showing relative strength and start to resist this and start to identify themselves as potential new leaders. And
Oh,
that's a
without
big
a
part.
doubt. Yeah, and that's this time is the time to refresh your watch list. And with the volatility that we're having, that watch list is going to change by the time that it's really ready, to have a follow through that ends up working. But now is the time to kind of sift through and see which stocks are holding up and which ones aren't. And this is very, very telling. And this is a great time to be screening and building your watch list. And all you have to do is, compare. We're going to talk about a few at the end. that are actually holding up nicely, and versus the ones that we were talking about in the travel industry that, they're going to take, maybe years until they're ready to be bought again. So this is a great time to build your watch list.
Yeah, and so really just to emphasize that you don't want to walk away too far, right? Because the next great opportunity it's going to be it's coming up, and it's going to be one of those very rare opportunities that we get in our lifetimes if you prepare and you're ready and you don't get caught flat-footed when these markets turn, because anything's possible. The markets could turn a lot quicker than we can imagine, and so you want to make sure you're aggressive on and keeping a consistent routine on finding those ideas.
Yeah, and just one more thing while we have this monthly chart up is that I've talked a lot about us being in a major bull market, and the way to know when that changed was simply looking at a monthly chart of the Nasdaq, which we're looking at right now, and drawing a line pen from the or a trend line from the 2153.83, which is your peak in the 2003-2004 period, and then connect that with the 2007 peak. And then you can see that if you continue that out, we're actually below that at this point. And so from the research that I found, this now states we're no longer in that major bull market, and you have to switch gears and assume that you are now in either a major bear market or you're in a which is more likely a sideways kind of choppy back and forth period, which would be like 1966 to 1982. When you get a chance, you should look at that. And that's what your expectation is at this point, unless we're able to get back above that line. And if we're able to get it back above that line, that's when you want to be aggressive and start pushing it, because last year, or the end of last year, 2018, when we had that bear market, we went underneath that line. And so you had to switch gears and think, okay, we're either in this sideways chop or we're in a new bear market. And the
And
fact
so,
that
Mike,
we
you're
are
looking at where it says 61.90.16, right? That was the low of the.
exactly. Yeah, and so that is in December of 2018. So as we came back through there, if that trend line was now broken to the upside, and that's when you put on the gas. You're aggressive unless you come back and fall back below it. So there's a time to be aggressive and a time to be conservative. Right now is the time to be conservative, and if we're able to make it back through that line, then you have to be aggressive as long as you stay above that, because that would mean that we're back in that major bull market that I've been looking at, that's like 1949 to 1966.
Excellent. So the market is in correction, and remember, we are right now in a bear market. So remain patient and let those next great growth stocks set up. Let's take a quick break, but when we return, Mike is going to put on his stock market history hat and walk us through a number of follow-through examples. Stay tuned. I am here with Scott St. Clair. Scott's one of our senior product coaches at MarketSmith. Now, Scott, there are a ton of publicly traded stocks. Just on the U.S., I think it's over 5,000 stocks. Who has the time to go through all of these stocks and find the very best ones?
Yeah, most people don't, right? So what you need is a tool like MarketSmith. We have decades of research on what makes a great winning stock. So we've done all the research for you. So we're going to try to highlight those specific stocks with those great data points. So if you're looking for that next great potential big winner, orange stock ideas button, you just click on it and you've got some of the main reports that we use, including the Growth 250.
Yeah, and the Growth 250 is the first list that I go through on the weekends.
Yeah, it's the most popular one, but there are others. There's the Breaking Out Today, Stocks Near a Pivot, and then the Blue Dot list, right, which is very popular. It's going to show you the stocks with the best relative strength. So we've done a lot of the work for you. What you have to do is review these lists. You're going to come up with some of the best ideas in that current market environment.
Perfect. MarketSmith saves you time and makes investment research that much easier. For more information, go to investors.com/podcast2020. Mike Webster is our guest on Investing with IBD, sponsored by MarketSmith. Okay, Mike, let's put on your history hat on and let's review the stock market. And so thanks for putting your history hat back on here, Mike.
Oh, dude,
Uh,
I'm never gonna live that down. I'm never gonna live that down. Oh my God, that's the worst picture I've ever taken. I mean, God.
But so now,
Oh,
Mike, let's take a walk back into history, and let's go back to 1929, November 19th of 1929. And so, what are you seeing on this chart right here?
yeah. So, man, there are so many, things that are so important from studying 1929. We're going to just focus on a couple of them here, as it relates to our current market. So, imagine you're in 1929. It was, you have the euphoric, roaring 20s. It starts coming down from the peak, and people don't believe it. It bounces off of the 200-day, which is that black line, just briefly. And believe it or not, right before the peak there was another follow-through day. So like 2 or 3 days before that peak at 358.77, you had a follow-through day. So if you'd been out of the market, which you probably would have been because you came crashing through your 50-day, which is the red line, you'd be sitting waiting for a follow-through day. You had a legitimate follow-through day, and then it starts to fail right away. So
Mike, so
what
take a
we
look at the
want,
screen for 1 second. So I'm using the little
yes.
highlighter. So right here's your follow through day.
That's exactly the follow through day.
Okay.
And this is what I want people to remember, that as you're going through this, we're going to get follow through days, and you need to be, switch from being bearish to bullish, but you also need to realize that not all follow through days are going to end up working out, and you need to know when to start backing away from them. So one of the key things that we found with the market school study that we did with Justin Nielsen and Charles Harris, and we have a home study on market school, and we go through this in detail, but I'll just share with you, some of the key findings is, one, to get your low above your 21-day, which is that, fuchsia looking, purplish pink line right there. And you want to, really be above that, meaning your low is above it, not just a close. And then that's when you're going to take the follow through more seriously, and it's more likely to work. But your first line in the sand is your low of your follow through day. And you can see that, yeah, right there, you undercut it. Undercutting it intraday is okay. You don't want to close below it. So as soon as you close below it and you couldn't hold the 21-day, you're pretty much exiting that market saying, okay, this follow through is not for real yet. It's still intact as long as it holds above your absolute low, which is that 320.45. Can you point that out?
Yep.
Which is underneath your 200-day. So again, you're out of the market, you need a follow through day, you get your follow through day, it's not really making progress, and it starts fading and it closes underneath the low of your follow through day, you're pretty much exiting at that point, because look what ends up happening is this completely crashed. And if you would have followed the system back in 1929, obviously before Bill invented it, it completely worked. It worked perfectly. You came crashing down all the way down to 212.33. And let's look at that low. And I know most of the people listen to this podcast and probably listen to it when they're driving or when they're working, but this is one that you probably want to actually watch at some point, because to look at these charts. So
And
you
it'll be
hit that.
available on investors.com/podcast. And then eventually, I think a little later on, they put on YouTube too.
Oh, really? I didn't know it was on YouTube. That's cool. So here you hit that low and you're waiting to have a follow through day. And you actually do get it right before that,
130.
yeah, on that upside reversal. Look at
Oh,
that blue upside reversal, which is way out of position. No,
oh,
over
over
to the
here.
right there. So what's
Oh,
fascinating is
wow, yeah.
you get this follow through there, but and why I wanted to go over these examples is not all follow throughs are created equal. It completely qualifies on the percent increase, and the volume is higher than the prior day, but the positioning of it is out of whack, meaning you're looking at your low that you hit, the 212.33, And then the high that you hit after that, if you can mark that like 3 days after, 4 days after that high, after that low. So the 212.33,
Yep.
and you go up for 3 days,
Yep.
and you hit this high. Now, a follow through, a normal follow through should be somewhere near that high. It shouldn't be in the lower position closer to your low, which
Which is
is
right.
where it happened right
Right.
there.
Right.
So that was your first warning sign that, hey, something isn't right here. And also look at the distance from your 21 day.
Yep.
You're really far from that. So yes, every follow through day you're going to buy something, but there's sometimes where you're just going to buy just a tiny, tiny little bit. Maybe you just buy 1%, a 1% position, just so you're doing something. Immediately that fails, hits your ultimate low, and then on this day that we have marked, or the last day of this chart, that's another follow through. So on this way down, we've had three. This is our third follow through, and this is more in a normal position, because in relationship to that low that it hit, where it went underneath 200, because that's our new low, right? That's our new low.
Yeah.
The next
Yeah.
day is day one. We're now on day 4, and although the volume isn't, you know, above average, it's pretty much right in line with the prior day. So it would technically be, that would be our follow through, because we're just looking for volume to be above the prior day. So let's move forward from this chart. So just have that as your reference point.
Okay. So now we moved that a couple of months.
Yeah, and can you put your cursor back on that day?
Yep. So here's your follow through day.
Yeah, so this is what you should expect from a follow through. Because a lot of people that are new to this don't, they kind of think, okay, I'm going to have a follow through and I'm going to just be off to the races. I'm
Right.
just going to be going straight to new highs. And they don't all work that way. It's just a change in direction instead of being in a correction. Now you're in an uptrend until proven otherwise, and it gets a little sloppy in there for about a month, but then you start trending above that 21 day, and after you've moved above your 50, that's when you're really going to start making some progress in there. And so for a couple months, you're making money, but look what happens. You run right into a declining 200 day.
Oh wow.
Which is that black line.
Yep.
So these are things to be thinking of for the next few months, because we're going to get a follow through day at some point, and you want to look at key levels like this. And so you're coming up into a declining 200 day. You want to be very careful. It couldn't hold, breaks your 21 day, then it breaks your 50 day, and you got to get out of that market because you don't know what's going to happen. What are your thoughts on this chart?
No, it's using the 21 day is definitely helpful. I think that keeps you out of a lot of trouble. The paying close attention to that 200 day will always keep you out of big trouble. And the fact that it hit that the 200 day as a ceiling, yeah, I mean that's what's going to happen. You're going to be below the 200 days for some of these vicious sells, just like 2008. But it's just really how it behaves. The other thing that I noticed, and we spoke about this a little bit on IBD Live. Here you have these massive wide bars, and then once you had that follow through day, slowly these bars started to tighten up. Right? Yeah, you still had some massive ones, more sellers trying to get out, but then look at just kind of the character change in this. It just kind of kept crawling up. So that's that's what you want to see too. If you see these wide bars, there are still plenty of people who want to sell or who are just looking more to trade, and so there's just that volatility. It's hard to make progress in that kind of environment.
Yeah, especially if you're tight with your stops on there. So that is probably the single best thing you can do, in addition to looking for that 21 day, is looking for that volatility, whether you're measuring it, all sorts of ways of measuring it. I just look at it as kind of your daily price percent change. Like at the end of the day, how much are you up or down? And right now, if you were only up 3%, that's a small day, whereas, back in the day, 3%, back in the day, meaning a couple months ago, 3% would have been huge.
Right.
So let's see what happens here.
Okay. Oh, wow.
Now, this is a weekly chart. Okay, so put your, look at that 195.35 up there. That was after the crash, the ultimate crash, and that's where our follow through was. And that's why you want to actually pay attention to follow throughs, even if you end up in something like this, because there was money to be made, but you had to pay attention to your 21-day, your 50-day, and look at how that black line, which is your 200-day, or on a weekly chart, it's a 40-week, becomes a ceiling that it just can't penetrate
Yep.
through. So along the way, and you guys should, when you get a chance, spend time and study all these follow-throughs in there that end up failing, but some of them you want to participate in. That's why Bill has taught us that every follow through, we're going to buy something, but it doesn't mean you have to go, in and buy a ton. And I think this is like probably the poster child example for that philosophy of, just waiting and making sure that the follow through actually does hold and does work.
Yeah, the market will continue to pull you in bit by bit if the rally is real. If not, you have to. It'll push you out, and you'll get hit a little bit, but that's part of the game. Okay, so
Yep.
let's move to the next one, and we're starting to run out of time here a little bit, Mike. So we might have to move
Okay,
through these a
so
little
we'll
bit.
just go, when you get a chance, just look at these, we've got follow-throughs in there, and this is an additional follow-through that we had. And I guess the point with this is that at the end of a bear market, everyone is looking for capitulation and some big sell-off. But if you look at the worst bear markets at the very end, there isn't much of it. It's just everyone has already sold, and then you get a follow-through, and it actually holds. So why don't we move forward?
Yeah, it's amazing how at this point everyone's just giving up.
Yep.
And then here's the reaction. So here's your follow through over here.
Yeah, and then look at your trending above your 21-day. And this is, those of you who traded from 2000 back in 2002, this is very much like your October 2002 bottom on up. So that's a double from 40 to
Yeah,
81. So you
that's
want
true.
to participate in that. There's a ton of money to be made, but
Especially
then
for our kind of stocks, they're going to go 2 or 3 times as much as fast as the market.
yeah, exactly. So then it fails again, but you have to be nimble. You get back out. You were back underneath the 200-day one last time. And then let's go forward. All right, so that was a tough time, and this is kind of very similar to kind of the beginning of 2003. If you look at our current market, where we have several failed follow-throughs in there, and then finally you get this little tiny follow-through that actually works. And so let's move from there.
And this is
And
the
that was,
weekly, right?
yeah, this is now the weekly chart to put the entire time frame in perspective. And what we just saw was right off of that 49.68 low. There was that follow through right down in there that we just saw on a daily chart. And that's why you really want to pay attention to these things and participate in each one, because some of them are going to, have this massive, massive move. And if you don't get in then, you're going to be chasing the entire time.
Okay, so now we jump out to 1933.
Yeah, and then or that was the daily
Oh, that was
version of that same time frame. So
okay.
just for people to be able to study at home.
Okay, now
All
this
right,
is
so
April 8th of 1938.
yeah, so now we've fast forwarded in time, and you can see just on the far left-hand side of your sheet there what was going on, and that was your move up, and then for a while you trended nicely, in the 1935 time frame, and you could think of that as kind of 2004 to 2007, or you could think of it as like 2017 and 18 up
That's
there,
right.
very
Yeah,
nice and
really low
yeah,
volatility. Yep.
very nice and constructive. Then you run into trouble. And this 1938, 37, 38 kind of feels a bit like what we're going through right now. It's not quite as bad as what happened in 1929 that we just looked at, but it's very, very severe. It's a substantial move. So why don't we look at the daily of this? Should be next. So yeah, so here you've got your daily chart, and this is a follow-through day. And notice as the market was coming down, through kind of July through September and October, that you were underneath your 200, you were underneath your 50, and you were underneath your 21-day that entire time. And you had some fake follow-throughs in there that end up failing, but now here's your follow-through that is, it's a legitimate follow through. You're closing at your highs, and this is a nice position of a follow through versus the first example that we looked at. So this is a classic looking follow through. And so let's move forward.
And one key here is that last leg down undercut that once again, and if anyone was still holding out for hope, they lost it at that point once it started undercutting that 112.24 level.
Exactly. And so here we've just moved forward a bit. So if you could point to that follow through that we had after it undercut 100, it hit 97.46, and then we had that follow through. And this, very much like the other ones that we saw, in the 1932 timeframe, and what we ended up seeing in 2003 is you hit bottom, and then you're going to shake out a few more times, and then you get another follow through in there, and then really what you're keying in on is that you're trending above your 21-day. And notice how this time when you go through your black line, your 200-day, you're doing it in a really powerful fashion.
Very powerful, yeah.
So
on that, yep.
Yeah. So unlike the first time in 1929, 1930, when we were going up against the 200-day, it was just, that 200-day was a clear ceiling. This became a floor and didn't look back. And then if you were shaken out underneath the 50-day here, you had to follow through about 4 days before this particular chart ends. Yeah, right there. And that's the type of action you want to see after a follow through, how it's powerful and it moves into relatively new high ground territory.
Then this is a weekly of it.
Actually, I think
no,
that's
this is actually October 5th, 1938.
Yeah. So this, you can see the roaring 20s that happened in there, that devastation, all the way on down, and then the really nice bull market that we had in there. And so this is, fascinating. This is fear. That was devastation in America. That was, massive unemployment. Yeah, crazy times.
Unbelievable sell-off there from 386 down to 40. Yeah, I mean, that is devastation right there.
Yeah, so let's move forward to the 60s. So this is the 1962 bear market, and we just wanted to share with you, because many people are new to trading and they haven't, had a chance to study a lot of history. That while the way this move is happening is unprecedented, bear markets aren't unprecedented, and that's why we use the system. We use follow through days. And again, you can see, through the really bad part of it, you're nowhere even near your 21-day. And just using that simple rule is very, very helpful. This is a follow-through day here. So this is when you're going to buy something, and let's move forward and see what ends up happening. Because again, this is, kind of very normal action that happens where you move up for a while, you run into trouble, you kind of have these three waves down, after we ran up to, what is that, 622?
622 down here, yep.
Yeah, those three waves down, if you go back and study 2003, very similar type of action. So this is what you can expect when you have a major crash, you come down, you hit bottom, you have a follow through day, you make a little progress, then you have to be nimble and back away. And now here's an additional follow through day that happens, and a nice little gap up on there and a pickup in volume. And let's see what happens. And there it is on a weekly chart. So it never looked back from that time frame. And what was key on there, and let's just go back one to just kind of point out that this was the Cuban Missile Crisis that was happening at the tail end of this. And as we came down and hit the 550 level on the right side of the chart, like 4 or 5 days before the end of this, that's where the Cuban Missile Crisis was resolved. And you can see that huge move up. Now, you don't buy on that particular day, but those are the days you want to run your screens at MarketSmith, see what's moved up a whole bunch. Those are your stocks that are being, squeezed from the short side. Those are the ones that are the A and A plus stocks that we've talked about that everyone has on their shopping list. They want to go and buy. They're going to have big moves. So you're paying attention to that. You're not buying anything, and then a few days later, when you have your follow through, that's when you are buying, and that's where, you know, I've talked about it so many times. That's where Bill was buying Chrysler, and he made a killing in it. It was one of his biggest trades early on in his career, was, you know, buying that right around that time frame. And, you know, think of it, you know, the Soviet Union and the US were, you know, going head to head, and you know, we could all, you know, be dead right now,
Right.
you know, if
Yeah.
that would have played out a different way.
Right.
So just like
Exactly.
this corona fear that we have, you know, that went away, and the corona fear at some point will go away, and you want to do your screening on that day.
And so we should end this segment, Mike, in another minute.
Sure.
Any other charts you quickly want to go through?
Let's just look at the 73, 74 just briefly. Let's move to the daily chart. So that was a horrible bear market. Same concept over and over again. You know, 21-day keeps you out. You get a follow through day. Let's move forward. And the same exact thing happened. You have a few waves down after you've made progress for a month or two. Then you get another follow through day. And let's move forward to the next chart. And that's when you're really off to the races
That's
at that
excellent.
point. So this is the way markets bottom. It's not just your first follow through day. You kind of have to go through this bottoming process.
Perfect. So knowing your history is everything, even if you're wearing a hat that's made for St. Patrick's Day.
Don't do it again.
Coming up next, Mike and I are going to go over 4 stocks that are showing a lot of relative strength in this market. We'll be back. I'm here with Scott St. Clair, and Scott is one of the senior product coaches at MarketSmith. Now, Scott, we've both been doing this for a long time, and we know that investment research takes a lot of time. There's so many factors that you want to look into to try to figure out whether this is a stock to buy or not. Quarterly earnings, huge sales growth. Hey, are institutions buying it? The list goes on and on.
Yeah, it's a common question. I hear it all the time. I don't have time to do this work. So you don't have to spend that much time. If you have a tool like MarketSmith, we do a lot of that work for you. Right there on the chart, earnings, sales, group strength, institutional sponsorship, like you just mentioned.
Right.
It's all there in the chart, so it allows you to make a decision much easier.
Yeah, and the beauty is that we have in-house analysts that go through the SEC filings. They pull out those numbers, and they put it right on the MarketSmith chart, and all you have to do is analyze them.
Yeah, I couldn't imagine having to go to the SEC website and look at the income statement, et cetera. That sounds like a lot of work.
Yeah, and that would take hours and hours, and in that time, you can go through hundreds of stocks and find the best ones. So don't miss out on a big winner because you don't have enough time to research it. For more information, go to investors.com/podcast2020. We are back with Mike Webster on Investing with IBD, sponsored by MarketSmith. Okay, Mike, let's go over a few stocks. We're going to go over 4 stocks here, and these are stocks that are trying to fight the trend. They're doing their best, and a number of these are very relevant in our time right now, and right up there in front of us. The first stock is Regeneron, and we have a weekly chart of the stock up here. And Mike, what do you see here?
Well, first I see that I don't have that silly picture with me with the hat on. It makes
Well,
me so
it can come
happy
back
that you
anytime.
don't.
It can come
No,
back anytime.
oh, don't do it to me. I'll be nice. What is wonderful about this is, you know, they're doing something to try to help out with this horrible virus that we have now. We don't know how it's going to play out, if it's going to be successful, if it's not. But it's not the only thing that they have in, you know, in their pipeline. But clearly, you know, you just look and see how the market is looking at it. Now, there are lots of players that are kind of the coronavirus players, whether it's, you know, people that make you know, gear to, you know, masks and things like that. But a lot of those feel like story stocks, where this was a real company, you know, with real earnings and real sales that happens to be in that place. And the sponsorship is incredible on this one too. You know, the only problem is we're in this bear market and we can't buy anything, and it is out of position. But what's nice is it had a very constructive kind of bottoming base, which was this kind of drawn out cup with handle, almost borderlines looks like a saucer with handle, tried to break out and ended up failing. Can we look at the daily
Yep.
of this one right there? Because I think it's helpful.
Yeah. Well, one thing I just want to quickly point out, the
Sure.
relative strength line right here is a rocket ship, and especially with that angle, also it's just dramatically outperforming the market, especially, and you can see the market at the top of this chart just plummeting, and it's not obvious in the price, but the fact that it's going sideways and actually grinding higher will really shows tremendous relative strength when pretty much all of the other stocks are falling apart. So let's go to that daily, and
Yeah,
here's the daily Regeneron.
and I'm glad you pointed it out on the weekly because you almost can't see the relative strength line on this
Right.
one. It's just going straight up,
Yep.
and I've never seen anything like the relative strength lines on the few stocks that are actually holding up in this market,
Yeah.
and which is really goes to the power of why Bill decided to only have a few things on his charts, where you have the index line, what the market is doing, and then a few moving averages, but then the relative strength line, which is how the stock is doing compared to the market. There are tons of other things out there that you could put on your charts, but he really boiled it down to the most important. And why that's important is this stock is leading, and even though as you said, it was this is really a rounder type of stock because it's grinding itself
Yeah.
out. It's not every day that it's up, but it's kind of this back and forth thing over the last couple of weeks, really trying to buck the trend, which is what the relative strength is showing you. But going back to our other point, before this mess started, you had that cup with handle breakout that happened, and then it failed through there. So if you were, if you had bought it on that breakout, the day that it came down and touched the 50-day, which is your red line on there, that's the day you'd want to exit because there was a breakout failure, and that happens all the time. And you don't want to ride it all the way down and hope that it gets support at the 200-day, which it did, and
And
most of the
Mike, and
time it
we
would
have it
go.
shaded here too. The this is 5% below the pivot, and so not only did it break the 50-day, it was starting to get really close to the 5% below. So it's giving a number of sell signals, including the volume was dramatically increasing.
Yeah, and I think that's a great point, and that's why we put those shaded areas in there. And to that point, when it came back up, it regained that original pivot. And lots of ways of looking at that is kind of an art, but you can see in that blue shaded area, which is the pivot area plus 5%. So pretty much just right up to the $400 level. That's where you could have been buying the stock back. Now, it's just this really odd time because there's just a couple stocks in the entire marketplace that are working. So I think it would be disingenuous to say, okay, yeah, you could have bought Regeneron there as it was, shaking out and moving back above 400. In isolation, you could have, but in the context of the general market, you couldn't.
Yeah,
So the
and
way,
what's kind of interesting is when it came back and retook the pivot, that was early February, and
Mhm.
and the market was still acting, hanging in there at that point. And I remember Regeneron started coming up on the screens too, and I was like, oh wow, Regeneron. Now this stock went on a great run back. I think it was 2013 or 2012, uh, and with a lot of the biotechs, uh, and so it already stuck out to me, but this is yet another amazing example of the market knows all. It is taking all of that knowledge and it was picking up what was going on in China, Korea, Singapore, and all of Asia, and starting to realize that the demand for Regeneron's products is going to go through the roof to help fight this coronavirus.
Yeah, it was really from, 2000, very late 2010 up to 2015, where
Yeah.
it had its, massive move from, $28 up to $600.
Wow.
So that's what we look for in stocks that we're trading, is something that's been able to prove itself in the past. But I think you're dead on right that the market knew ahead of time that there was something special here, which ties us back to the general market that we were talking about, that don't worry about the headlines. The market will figure it out, and it will bottom before the news tells you that it's bottom, just like this one told you just by the price action.
Yeah, and that being said, even though it is dramatically outperforming the market right now, it hasn't set up anything. So you have to be patient. Put on your watch list, watch it every day, and it's going to set something else up, and it could, very well could be one of the leaders in the next rally.
Yeah, I would say most likely if the market were able to turn based on how this has acted, unless it has negative news from the trials that they're going to do, that
Right.
you're probably looking at more like an ascending base or a 3 weeks tight type of situation. But it's way too early to tell. But this is on my watch list for sure.
Okay, let's go to the second stock, and this is one of the exciting tech stocks of our time. It's Clorox.
This is sad. The only time I've ever traded Clorox in my life was back in 1998. It was the first stock I ever shorted. And I called the general market right. I put on my first short. I thought it was a genius. The market was down, I don't know, let's call it 500 points on the day or whatever was big at the time. And Clorox was up. I'm like, wow,
You learned a
okay.
good
So
lesson then.
yeah, that I didn't know what I was doing. So shorting is a very difficult game. But the reason why I bring that up is Clorox tends to be one of those stocks that in general, um, all of these kind of soap related and cleaning product stocks or your safety stocks
Right, your
in a
defensive
normal,
stocks.
yeah, perfect, a defensive stock in a market like this that money would gravitate towards it anyways. But now you have this double whammy where it's a defensive type play, but it's also a cleaning product play. And that's what we need. You cannot buy bleach. You can't buy Clorox. It's sold out everywhere. So the thought process on this is it's either when the corona fear is gone, it's either going to revert back to the slow pokey kind of junky stock that it's always been, or this is going to be an inflection point. It's going to be a game changer where now our habits change and we're always cleaning, and I'm sure they'll be able to capitalize on it and come out with more and more products that they can sell to people to help them keep everybody safe, because when the coronavirus is gone and they figure it out, we're still going to have the flu every year, and the flu
Right.
kills tens of thousands of people, and it's sad that it just doesn't get much news. But this company could actually save people's lives, and so I'm hoping that it changes and that the earnings growth starts ramping up, and then this is another stock I have on my watch list. And look at that relative strength, Arusha.
Yeah, I did this is probably the closest that I've seen to 12 o'clock in a long time. I mean, and
Right.
it's been going on for weeks. You bring
Yeah.
up a really good point there, Mike, because when I looked at Clorox, okay, fine. It's there's some demand now. It's a defensive play when the market's falling apart. Yet a number of these larger institutions have to park money somewhere, and so they're going to go towards some of these stocks here. But that behavior change. I mean, that this could be a catalyst for, like you said, it just might not necessarily be this dramatic growth stock, but it just may, instead of selling at 3% every year or every quarter, it might jump up to 6% because everyone now is grabbing a Clorox product whenever they go to the grocery store and wiping their tables off every day and things like that, because that's what we're all doing right now. And of course, we're a lot more conscious of washing our hands and all that kind of stuff. So that behavior
And so are
change could,
businesses, right?
yeah,
That
yeah,
we have someone around the company that has been recently hired simply just to help out in that
right,
with that task. And I would imagine our company is probably going to keep that person, and all the other companies out there are going to do it too, because one, they could leverage that by telling people that that they're cleaning, whether it's an airline or a
yeah,
cruise ship or restaurants. So I do see this as a possible game changer, and we don't have time to look at it now, but back in history, it did have a good run in the 80s as well as the 90s, and you wouldn't think of it as the Clorox that we've thought of for the last 20 years.
right. And here it is on the daily chart, and it's
Yeah.
now at this point, yeah, it's been a rocket ship. But when those bars get really wide like that, usually there's going to be some good volatility coming around and more price discovery at these levels.
Yeah, so it's out of position. Even if we had a follow through day tomorrow, which obviously we couldn't because, we're not in position for that. You can't be buying this. It's, 18% out from its pivot, but this is one for the watch list. And it really depends on how those earnings are coming forward, because the earnings right now and sales are single digits, mixed, negative and positive. So this is not a can slim name as it stands at this moment.
Okay, let's go to the next stock, and this is one that we're all very familiar with, but it's funny. At least me, I feel like I'm even more dependent on them now over these last 3-4 weeks. Amazon.
Yeah, you know, I was looking right before we got on, I was either gonna go to the store and buy some more pasta, because who knows how long we're stuck at
Yeah,
the house.
yeah,
Because, I don't know where everyone's listening to this, maybe around the country or around the world, but everyone's tackling it differently. But all of our restaurants and bars in our area are, closed. So you're doing a lot more, buying things at the store if you can get into a store, or ordering online. And they were even sold out of something as simple as pasta and pasta sauce. And so there's going to be this shift to, as soon as they get, their inventories back under control, of people just saying, you know what, I don't want to go to the stores. I don't want to, have to deal with all that hassle. It's so much easier to just buy things online. So the way I'm looking at Amazon, I liked it before this mess, and I like it
right.
even more now, because I think people, just like Zoom that we talked about last time, they're going to start using it and saying, you know what, I like this. The coronavirus has gone away, but you know what, it's still handy to use the Zoom feature. I'm going to stick with it. And I think it's the same thing with Amazon. And as you're pointing out, look at that relative strength line. All these stocks we're bringing up have that in common, where they're just ripping up. And the most important thing on this chart is this weekly bar, where it's closing. Well, it's midweek right now, but right now it's back at its highs. So it's clearly getting supporting action in here.
And you
Again, you
also
can't.
undercut the lows of that previous
Mhm.
base.
Yeah, and the fact that it went underneath that and got support is a huge tell, like a poker tell, where
Hmm.
it's saying, hey, the the big fund managers want to own this, versus, some of the other stocks that are just falling apart. And pretty much look at 90% of them, they're going through prior lows and just going lower. So
Right.
this is one to keep on your radar. It's not in position to be bought right now, but again, it's at the top of my list.
Yeah, what was interesting, because I tried it, you can see it breaking out. It kind of looks like a saucer here, but cup with handle. I tried it out of here, and what I liked is it was tightening up. You had a larger, kind of wider cup, and then it tightened up, and then it broke out nicely out of that. But the one thing that was disturbing me was you weren't getting a lot of great confirmation from the relative strength line. And so it went up, and then of course the market really started to get unglued. So I had to cut my losses at that point, or I think break even. Uh, but it's just amazing at how powerful that relative strength line is as a confirmation tool too. It was telling me, but I was like, yeah, it's Amazon. Let me just get some. I know it's a little bit lagging, but that can also help you out a lot when you're trying to figure out what stocks to get into, even just in a normal market.
Well, I think we have a daily of this, because I was trading it too. And one thing I'll point out, because I've studied saucers a lot, and this was a saucer that, in general, not really in general, all of the saucers that I've studied historically that ended up working out, the nature of them is they have a low relative strength
Hmm.
number and a low relative strength line.
Okay.
It's because of how that base is formed. Now, what makes this one a double whammy, makes it even more dramatic, is that you have that base next to a base while we had this bull market going on. So
Right.
it was completely setting out. So if you have an ascending base and it has a low relative strength when it's breaking out, you need to stay away from that stock. That's not in its character. If you have a saucer that has a low relative strength, you give it a pass. But just like both of us did, when it started failing, we just said, you know what, we love this stock, it's great and everything, but it's not working properly, so we have to exit the position. And there wasn't really anything wrong with Amazon. It was just the general market that did it in.
Yeah, no, that's a great little detail there, Mike, with the saucer. The detail that I missed. The big reason why I got into this one was, of course, it's Amazon. It reported earnings. You had a breakaway gap on earnings, and we've seen this over and over again in good markets, where if you have a really powerful move like that, 15.6 million shares, it was acting right initially. It's like, okay, here we go. Amazon should get that 20% in a good market. But then, as you said, once it started changing and not acting as it should, those were kind of the warning signs to force us out of the stock.
Mm-hmm.
Okay, let's go to the last stock here, and it is the one that's on everyone's mind, well, at least on the store, because the lines are wrapping around the blocks. It's Costco, and Costco has been a nice, slow, steady stock for a while. I think I've tried it a few times as attacked as a counterbalance in my portfolio. It's a store that I shop there every week to grab just a few things. But it is right now a store that I won't consider for a little while because everyone else is going there 24 hours a day.
Well, I certainly was there this
You're a
weekend,
very brave
and
person.
oh my God. Well, part of it is I wanted to see, well, one, I wanted to stock up on a few things, but really I was interested in the mass psychology, and I felt like
Yeah.
very much the way Bill used to be when he was trading pick and save. He would drive down on his way to work or on his way home, and he would count the number of cars in the parking lot
Hmm.
to get a sense of, is the store doing well? Is it not? And I wanted to get a sense, not if Costco was doing well. I knew that, it was going to be selling out of stuff, but I wanted to get a sense for people and what was the mood, because midweek last week I'd gone into a Trader Joe's and everyone was happy. The store was completely stocked with everything. And I was talking to everyone and they were like, oh yeah, it's no big deal. And I hadn't been shopping recently, so I had got the sense like, oh, there's no panic. And boy, was I dead wrong
Well, you
about
remember
that.
what I wrote, and you
Oh
shared that
yeah.
on Twitter, and you remember what I wrote to you immediately on that.
Oh yeah. And it was, look, I couldn't have been more wrong about anything in my life, because one data sample is not enough. And I haven't been doing a lot of shopping in the household lately, and luckily my fiance does it for me. So then I made a point. I've been to Smart and Final, I've been to multiple Walmarts, I've been to Target, I've been to, Costco's, and Ralph's, Vaughn's, Dollar Tree, you name it, because that was what you do, is you do a post analysis in life. And I had one data point that happened to be just a lucky store that had everything. Now they don't have anything, and nor does anything else. So, I find it fascinating. In what I think people should do, in addition to looking at follow throughs, is get a sense for, your area. When is the fear subsiding? And this weekend there was a line wrapped around our Costco, which is like the biggest one in the country, as I was told, just to get in. And by the time I got in, all the toilet paper and water had been gone. It had been taken
Which
away.
Costco was that?
This is the one in by Sky Park in Torrance. I was told that it
Oh,
was
okay. Oh, wow. Okay.
the largest one. They actually moved from one next door that was huge to it and built an even bigger one. And so I find it fascinating. But really, the reality is this chart, is not in position to be bought. But I've never seen relative strength lines like this. I mean,
Yeah.
this is, you see a relative strength line like this in a little biotech with no earnings and no sales. It's just a story stock, not a real big company that you can understand. They treat their employees well. They've got great prices. They've got great products. Now they've got a car wash at mine. They've got gas, so they have travel that you can buy through them. They're tackling everything. But this is, all four of these stocks are at the top of my shopping list for as soon as this market turns. And what's nice about it is you can do the Peter Lynch, Bill O'Neill thing of going in and getting a sense, is the company run well or not? And it clearly they're doing the best job that they can in this environment.
Well, thanks so much, Mike. So there are a number of ideas to add to your watch list and keep building it up as we keep going through the correction and keep starting to hopefully find support in the
Yeah.
next couple of months. So, Mike, once again, thanks for joining us. It was very, very valuable lessons that you shared with us today.
Thank you.
That's it for this week on Investing with IBD. I'm Arusha Pierce, and thanks for listening.